Good afternoon, everyone. This is Arcadia Trading, where I do a market breakdown for you as short as possible and then show you the resistance and support and market news for SPY, QQQ, and any related sectors. So we're first going to look at SPY, 5 minutes. So today we had a lot of actions for FOMC. And so in the beginning, this is where we got our bull move, right, at 2 p.m. Eastern Standard Time, where we got our 25 basis point. And initially, the bulls took over because there was the dot plot showed that there's no ongoing rate hikes anymore. It's more like a potential hike and hold, where it was only at 5.1%, which previous FOMC meetings, we always have a higher dot plot every time. As the next one, and there's a higher dot plot again. So that was bullish for the market, and bulls reacted to that, and you can see that move. And then Jerome started speaking close to roughly around here, and what made this drop initially was him saying his base case would be no rate cuts at all for this year. And the reason it dropped is because the market has priced in rate cuts during later this year. So the market priced in something, and Jerome was very firm on absolutely no rate cuts this year. Market had a couple fears, and we dropped. Essentially, the biggest red flag was when we broke that this double bottom. If you're an intraday trader, you can see that we broke that double bottom, and then we dropped through it. Came back up to here, retest that resistance. This orange line, drew this yesterday. You can check my video, previous video, if you want to check out the long form videos. And so rejected there. And another red flag is we confirmed a downtrend from there once we broke this prior low. And you can see how much the bear followed through right after that broke. So that was essentially a 5-minute downtrend change to the bears and a 15-minute trend change. Let's see, yep. So you can see that we had a 15-minute trend change right here. Broke the prior low. We had a prior high here. And then the bears follow through. And right now, if you zoom out, it doesn't look like it's a big deal if you go to the hourly time frame, right? There's no hourly trend change yet to the bears. But this is just the initial move, so we need to see bear tomorrow follow through. So essentially, we had a big move down, and we just need an hourly trend change. So we just need a couple hour candles above the previous high, and then break the prior low. Then we have a hourly downtrend for the bears. That'll be a win for the bears. The first step they need to do, and if we can get that, then our daily is set. So that means the daily temporarily high is set. You guys right here. So then this would be the temporary top if we get the hourly downtrend. Meaning we're going to have daily consolidations. So on a daily chart, we will likely consolidate. Same thing for QQQ. QQQ actually gets affected by the rate hike more than SPY. Let's see how much we drop here. So from top to bottom, SPY dropped 2.5% from the top. And QQQ, let's see here. QQQ dropped 2.9%. Another thing I really want to point out is while Jerome was having his speech and question Q&As, Yellen was talking about as well at the same time, and she said that they're not increasing the limits for the banks for the FIDC or FDIC. Yeah, FDIC. And so that also spooked the market a little bit while Jerome was saying everything is fine, that they will back all the deposits, while Yellen was saying the opposite, which is a little bit, what do you call it? A little bit sketchy and sneaky, because when they both speak at the same time, Jerome was kind of like distracting almost, if you think about it. So I think that was part of why we got the drop as well, because if you get something like that from Jenny Yellen, then you can see the financial sector drop a heck lot more than the indices. You can see this drop here. Well, it's about the same, but you can see XLF broke a lot more supports than SPY did. Yeah, XLF and KRE both are now testing the all-time lows or 52-week lows. So KRE is the regional banks ETF. So this is the small banks, and we are now back to this testing this area again. So those two orange lines. So tomorrow, if this breaks, then there's going to be a lot of fear back into the market regarding the financial sector. Same thing, XLF, which is the big banks. You can see we're pretty close to the 52-week low as well, this area. So we'll see if the bulls can actually hold this area tomorrow or not. If not, then we're likely getting a lot more downsides for the entire sector. QQQ, SPY, everything. And dollar, which is usually inverse of SPY and the indices. This was initial right when the 25 basis point came out. We had a drop because of the dot plot was saying that we're not going to increase a lot more rate hikes anymore. So that was why the dollar dropped. But then once Jerome said they're not going to cut any rates, then this bounced as well, which when dollar bounces is a headwind for the market. So we got to take a look at this as well. But the correlation is not as strong as it used to be, but it's still correlated. And the semiconductor sector, NVIDIA, is still a lead bull. So you can see, even though the entire sector dropped, NVIDIA did not drop as much. Here, this is how you check. So the relative strength is NVIDIA held its low of the day. And then you go to QQQ, you can see how far it broke. This was the open for QQQ, and look how much we broke from that range. So the semiconductor sector is still very strong, but there's a potential of a lead bull turning into a lead bear because of how much more they ran up while others are going up as well. So when you have something that goes up a lot more than other sectors, when there's fear in the market, all comes in together, then there's a potential of the lead bull dropping a lot more than the other sectors, especially a sector like semiconductor, which is a lot more volatile. XOXX is the semiconductor ETF, and I added a little bit of short to it. So I added XOXL. Wait, is it L or let's see? Yeah, sorry, no, SOXS. So I'm gonna go here a second. XOXS. This is the semiconductor short ETF of a 3x leverage. So that means if XOXX drops 1%, this will go up 3% because I'm shorting the market. So if semiconductor sector goes down 3%, I'll be up 9%. And yeah, I have a stop loss set close to where QQQ, around this area. So if we do bounce tomorrow, I don't want to see us go back above our previous open here today. So we'll likely get a like hourly bounce where I was talking about the hourly downtrend. So let's say tomorrow we this big drop and then we bounce. I don't want to see over a 50% retracement, which is sorry, that's the wrong one. Where's my fib? So I don't want to see a back to a 50% retracement, which is close to this area. So I want both SPY and QQQ. If we bounce, cool off some indicators, and ideally we stay below 0.382, which is the bear flag territory. Then we get an hourly bear flag and then go lower. And so yeah, so I don't want to see it. Let's go over 5-0. If we do, I might stop out, or I'll see how it rejected this area or how it bounces there, because we can potentially get an equilibrium, which is two patterns that can fake you out from this scenario where an equilibrium is we bounce, go up, but we don't make a new high, and we tighten up. And then we potentially break outside or downside after tightening up. So that's a possibility. This one will shake everybody out because you go up, people get stopped out, and then we drop again, people get stopped out. And the other scenario would be a megaphone, which I don't see at the moment, which this was a megaphone. You see this megaphone pattern where we drop lower with no follow through, and then we went higher with no follow through. That's what a megaphone is. And if we do zoom out to the hourly, so we get a megaphone, it'll look like that. Drop a little bit, and no follow through from the bears. And then we go up, and then we go up there, and no follow through from the bulls, and then we come back down. So it'd just be like a even worse than the equilibrium. So everybody gets stopped out in this one. No signs of that at the moment, so we'll be watching for equilibriums or bear flags at this moment. So if you want to go into short, watch for that 0.38 retracement or in 50, then short there and put a stop loss above it. And if we get a bear flag, then we'll break the prior low. And so within 0.382 is the bear flag. If it goes up to 50, it won't be a bear flag, but there's still a chance of us dropping as well. So we'll just see how it bounces tomorrow and how the futures trades tonight. I'll give you guys an update tomorrow as well, and we'll see how the bears can actually follow through or not. This is just a one move, and usually the day after the FOMC meeting is the real move. So tomorrow is going to and Friday is going to be the real move of the reaction to the FOMC because everybody gets to digest it overnight of the information. And so yeah, we'll see what the real move would look like tomorrow.